This is Lara with your end of the week oil analysis for the trading week ending Friday 26th of July. I have a new midterm target for oil at 35.25 for a third wave down. This may exhibit an increase in momentum and it could end with a capitulation spike. The final target remains the same at 10.72. We can have confidence in it if price makes a new low by any amount at any time frame below 50.61. I have still a bullish alternate wave count. We may have confidence in that if price makes a new high above 66.59, and at that stage a target for upward movement to end would be 89.80. This is the preferred bearish Elliott Wave counter. It has more support from classic technical analysis, which we will get to in the last half of the video, than the bullish wave count does. And for that reason, this is my main preferred wave count. This wave count sees a supercycle degree second wave correction unfolding as a double zigzag. Double zigzags are fairly common Elliott wave corrective structures, particularly for second waves. The first zigzag subdivides 5, 3, 5 and is labelled cycle wave W. The double is joined by a 3 in the opposite direction labelled X, which itself subdivides as a zigzag. This is the most common Elliott wave structure for X waves. And the second zigzag has a purpose to deepen the correction. When the first does not move price deep enough, the target would see that purpose achieved. The second zigzag, labelled cycle wave Y, should subdivide also 5, 3, 5. It looks like minor A may be relatively short and minor C may be a long extension. When waves extend in price, they also extend in time, and these subdivisions show up at higher time frames. And so within primary wave C, I'll expect intermediate waves 2 and 4 to be multi-week or possibly even multi-month bounces and be very obvious on this monthly chart. If primary B continues any further, it may not move beyond the start of A above the invalidation point. Let's look at the weekly chart. We're going to have a quick look at the structure of cycle X from its beginning here. This point here, it fits very well as a zigzag, 5, 3, 5. The C wave is extended. Its second and fourth waves are extended also in price and time. 1, 2, 3, 4, 5. This has a good fit. This has a better fit than trying to see this upward movement as a 5-wave structure, which is what my bullish wave count must see it as. But it is possible to see them both and both to be valid. And that is the biggest problem or the biggest difficulty with Elliott Wave. It is not always possible, even in hindsight, when a movement is very obviously done, to tell with absolute certainty if it was a 3-wave zigzag or a 5-wave impulse. It's all how you label the smaller degrees within it and what degree you label all of the little corrections within it. If cycle wave Y begins here, then primary A may be complete, primary B, a zigzag, may be complete, primary C beginning with intermediate waves 1 and 2 most likely now complete. If intermediate 2 moves any higher, I would expect it to find really strong resistance at this trend line, but technically it may not move beyond the start of 1 above the invalidation point. The target here is the same as on the last monthly chart. Let's take a look at the daily chart now, where primary B may have ended up here. Here is intermediate wave 1, intermediate wave 2, intermediate 3 beginning with minor waves 1 and 2 most likely over here. I am putting the label for minor 2, not too tentatively, but I'm going to put it over here. I'm going to allow for the possibility that could be wrong and it could move higher. But I'm going to label it over here because of the strength of this downward day with strong volume actively pushing this lower. If minor 2 is labelled as incomplete, then you'd have to label it A, B, C. And B would exhibit quite a lot of strength. B waves should be weak. They should not have that strong push from volume. This does not look like a B wave. It looks more likely to be the start of a third wave down. So that's why I'm labelling minor 2 over here, relatively brief and relatively shallow. It could be now that the downward pull of a third wave at 2 degrees could be forcing minor 2 to be more brief and shallow than it would otherwise be. The target for intermediate 3 is for it to reach a common Fibonacci ratio to intermediate 1. This is the bullish wave count at the monthly chart level. I've moved the degree of labelling of this zigzag all up 1 degree to look at the possibility that instead of supercycle 2 continuing lower as a double zigzag, what if it was over here as a single zigzag? If that's the case, then from this low to this high, a bullish wave count must see this movement as a complete 5-wave structure. That's possible. In my judgment, it doesn't have as good a fit as seeing it as a 3, but this is possible. This could be cycle 1, this could be cycle 2, ending close to the 0.618 Fibonacci ratio of cycle 1, which is why I'm going to label it complete there. And within cycle 3, no second wave correction may move beyond its start. Let's take a look now at the weekly chart, at how we see this as a 5 from its beginning here, this point here. We have to see it as 1, 2, 3, 4, 5. This second wave it looks disproportionate to the second wave 1 degree higher. Now for my first wave count, which sees it as A, B, C, it's not so much of a problem to see a second wave within C bigger than B. But here, that is a bit of a problem. The middle of the third wave fits okay. The fourth wave here is relatively brief compared to the second wave. The fourth wave here is reasonably in proportion to its counterpart second wave. But here, within primary 3, which is an impulse, intermediate 4 is much more brief than intermediate 2. This is actually acceptable for any commodity to behave like this, because this is still a common behaviour, and so it is possible to see this upward movement as a 5. It just doesn't have quite as good a look as seeing it as a 3. But more importantly, this bullish wave count does not have as much support from classic technical analysis at this time with the data in hand, and for that reason, at this stage, I will have to favour the bearish wave count. If cycle 2 is over here, cycle 3 may have begun. Target is for it to reach a common Fibonacci ratio, 1.618 to cycle 1. Cycle 3 must subdivide as an impulse. Primary 1 and 2 may be complete. Let's look at that at the daily chart level. Primary 2 may be over here. Primary 3 may be underway. Intermediate 1 may be complete. Intermediate 2 may move a bit lower. The target remains 54.55 to 53.81, calculated now at intermediate and minor degree. So a small target zone, well, not that small, a reasonable target zone for a bit more downward movement next week. I will expect, if it gets down there, for intermediate 2 to find strong support at the lower edge of the base channel. Intermediate 2 may not move beyond the start of 1. A new low by any amount at any time frame below this price point would strongly favour the bearish wave count. At the monthly chart level for oil, at the last reasonably strong bounce, there was a very strong bearish engulfing candlestick pattern telling us that this upward movement looked complete and a new downward wave looked likely to have begun. Volume also strongly supported that month, with downward movement actively being pushed lower by increasing volume. Look out for next support about 42. RSI is neutral. There is room for price to rise or fall. MACD is bearish but not full ball bearish. It's still above the zero line. There is a little bit of bullish divergence between these highs between price and on-balance volume at the monthly chart level. This high when in price did not manage to make a new high, but on-balance volume did manage to make a new high. I am reading on-balance volume as a leading indicator in the same way that Lowry's read the AD line for market breadth as a leading indicator. Where on-balance volume leads, price may follow. This shows that there is a stronger push up from volume than price has been able to achieve, and it may yet push price up to make new highs. That's how I'm interpreting that. But I have learned over the years that divergence with price and on-balance volume is not as reliable as on-balance volume's behaviour with its trend lines. At the weekly chart level, when we have had downward movement, it has come with increasing ATR. When we have had upward movement, it has come with declining ATR. There is strength in this downward movement, there is weakness in this upward movement. Again, downward movement, increasing ATR indicates strength. Upward movement, it's now flattening off ATR. Now we have a bearish engulfing candlestick pattern from last week on the weekly chart telling us that this upward bounce, which had declining volume and weak ATR, is likely now to be over, to look out for a resumption of the downward trend. ADX is not catching up though, it's still declining, telling us that there may not be a clear trend. Price is essentially range bound. If there is a trend, ADX is not telling us of the trend yet. This bearish engulfing candlestick pattern also has good push from volume pushing price lower, increasing the significance of the reversal implications here. And now upward movement for the last week, a small inside week, a small doji with lighter volume. This may be a small pause within the trend. A doji on its own is not a reversal candlestick pattern. On balance volume at the weekly chart level is at reasonable resistance. This may halt the rise in price and force some downward movement. RSI is neutral, room for price to rise or fall, as is stochastics. At the daily chart level, this is quite a strong downward day this week. It has a strong push from volume pushing price lower. It looks again like this was a counter trend movement, and we may be ready to move down more strongly. ADX is fluctuating, it's essentially flat. It's below, the negative DX line is above the positive. ADX is above 15. If it begins to rise at the daily chart level, it would be telling us there is a downward trend. ATR has declined the last couple of sessions as price has essentially moved, mostly sideways, not really higher, but green candlesticks. On balance volume is at weak resistance at the daily chart level. This may assist to halt a rise in price here. RSI is neutral, room for price to rise or fall. Stochastics entering oversold. But if ADX starts to rise, then if there is a trend, stochastics can remain oversold for quite a long period of time. It's not particularly useful as a timing tool. That's all from me with your oil analysis. I hope all our members are having an awesome weekend.